Hey guys, what's up? FX here. Welcome to episode 37 of the weekly market outlook with TradeXprop. In this episode, I'll be covering the DXY, US bonds, the S&P 500, gold, and also Bitcoin. And if you have any other asset classes you would like me to cover, just leave a comment down below, or even better, join our free Discord channel. Link is in the description below. Alright, so I know we haven't been doing this for a while, because I kind of transitioned over to doing a few of the other projects that we have on hand, including the one that you just pretty much saw on our channel. We did tutorials for the different platforms that we offer, things like CTrader, MatchTrader, and also DXTrade. So I was busy with that and a few other projects, but I'm happy and glad to say that we have now restarted and resumed the weekly market outlooks. Okay, so with this in mind, let's get straight into the video. So first off, we have the dollar index. Now the DXY on the weekly chart right here, we can see kind of like a large displacement move lower, and I know it looks a bit messy as of now, but do be patient with me. Essentially, this is where we currently are, and we at the moment have kind of tapped like an area of support right here, and we're showing rejection. However, I wouldn't say as of now for certain that we are going to be continue higher, even though we did wick beneath the previous first week of March. We had this weekly candle, we did wick beneath it, and we failed to close beneath it, and now we're closing kind of in like a, I'd say like a reversal hammer candlestick pattern, also tapping into a weekly support. Okay, as of now though, I don't want to be the first one to say that we are going to be reversing higher, especially on the back of this large bearish candle on the first week of March right here. Well, taking a look at some of the data right here, we kind of see that in terms of the fundamentals, at least the US economy, it is showing signs of stabilizing. We're seeing GDP at 2.3%, and other key indicators like the ISM Composite PMI also holding above the 50 mark. Inflation also appears to be somewhat going into a period of moderation. We're seeing CPI at 2.8% after a downward trend since the earlier peaks from Q4 of last year, and also the earlier months of the new year. As of now though, further rate cuts, I think, with this in mind, with the interest rates now being stabilized at 4.5%, we might be seeing that the Fed might proceed cautiously. Of course, depending on how stable inflation is and also how strong the labor market is. But as of now, I think with what we're seeing, we could be seeing a reduced appeal for the dollar, right? You can see that for since September, we've been seeing the market kind of just transverse higher, and now in just less of that, we're seeing this large move lower right here in just, let me see, around almost a month. To be fair, the move higher was pretty much around the same. We did peak around this low to this high of around 100 days, which is around just a bit more than 3 months. So we're seeing kind of like a correction of that, but this is a really steep correction. Okay, especially now we're looking at just soft data, and also just how uncertain the markets are with all these tariffs. It's going to kind of just weaken the confidence that people have in the dollar as a global reserve currency, right? Throughout all these periods right here, this entire period, it's all just been dollar crushing other currencies, but we're starting to see that kind of pull away, right? It's gonna pull away. So as of now, the direction for the mid to long term, it remains unclear. We are getting into the middle of March, and we're seeing some data being released, but as of now though, I don't want to call a reversal right down here just off the weekly, but we definitely could see that happen if the lower time frame starts to align to see some form of a pullback at least. Okay, so as of now, though, let me just clear off some levels. These are too far higher, but after this big push, and then we're coming into rejecting the support, next week we could potentially continue higher into this area right here to push lower. But if we do come down lower, we have some areas right here around the 102 to 103 mark to see some support being formed, right? So it kind of depends which level we come into first, right? So dropping down onto the daily right here, these are the weekly levels marked out on the daily. Essentially what we could be seeing right now is we have formed this area of resistance. If possible, we could break higher, use this as support to continue higher back into this area of interest for potential shorts lower. Okay, but if we do open next week and we just tank down straight into the 103/102 mark, we could see a push higher from there as well. Albeit, do understand that you're going to be longing off of such large bearish momentums right here. Okay, so always keep that in mind when you're looking to a long off of such a big trend right here. Okay, so that's pretty much it for the dollar index. Long-term direction still unclear. I kind of want more data to be shown right here, especially let's just look at what's happening next week. We do have core retail sales right here, and also next week we have the big FOMC. So definitely I would like for both of these data sets to come out before setting a longer term forecast on the pair. We have forecast for the funds rate of 4.5%. We're maintaining it. That's what people are expecting it to be. And also for retail sales, we are expecting an increase compared to the previous core retail sales release. Okay, so people are expecting a rate halt as of now. So no rate cuts, no rate hikes. We're expecting a halt on that as of now, and we are also expecting improved metrics in the economy by seeing a higher figure for the retail sales. So curious to see what will actually happen. But if this improves and we're halting rates, this could be something to kind of propel the U.S. economy into like a more stable part of the currency's fundamentals. Okay, so that's pretty much it for the DXY. Let's go back onto the weekly. Let's take a look at the US 10-year yield. All right, so bond yields, they certainly have also plummeted following the drop from the USD, right? But this isn't really a big plummet, I'd say. We definitely did see like a slight pullback into kind of like this midpoint of this swing low to swing high right here that's drawn out. And essentially, unlike in past recessions, for example in 2018, we didn't really see the bond yields just kind of just tank. This is just, for me, it's pullback, right? We pulled back into some support down here and we rejected off of this on the weekly, and now we're pushing higher, albeit with not much momentum. But still, these two bullish candlesticks are coming off of multiple consecutive weekly bearish candles for the bond yields, right? But now we haven't really seen just how the bonds have dropped sharply as investors, they flock to safer assets, right? But there are a few reasons, I think, for that. We kind of see that since the bond yields don't have like a dramatic large drop, it kind of indicates that at least it isn't pricing itself in response to an imminent recession, right? Which is a positive signal for risk asset like stocks. As of now, we aren't in a recession, right? We are definitely seeing growth kind of like stagnating a bit, and we're seeing inflation increase, but increase slightly, not by a lot. But we are kind of like in between that area of stagflation, but not to the point of recession. I don't think anyone wants to see the U.S. stumble into a recession. But previously, before this, we were seeing stagflation, right? But now just last week we saw PPI and CPI being released, CPI being at 2.8%, PPI being at 3.2%, and this actually has reduced pressures on the yields to just rise, which kind of maintains a balanced environment for the bonds. Okay, so with this in mind, the stable yields, they kind of suggest somewhat of a neutral to maybe even bullish backdrop for some of the equities that we'll go into later on, rather than a flight to just boom safe haven bonds, right? This does in fact, of course, contrast with the with recession fears that the crowd is actually currently facing. So this is something that's a bit of a I'd say unconfirmed, or kind of like in between kind of outlook, right? So what we saw based on technicals at least is that we came into support and we're pushing off of it by quite a large margin, although not dramatic, but still it's not too bad, right? We came down here and then we've risen since then around like 6%, right? So I prefer to see stronger bullish kind of closes to kind of like determine if we will continue higher, but as of now we've respected these two levels and we're kind of like in between this range right here. So I would like to see price, if possible, transfers higher into this 4.431 area to find some resistance, and if we break above it, we could retest this and continue higher into some of these areas right above here. Okay, so dropping down onto the daily, yeah, that is pretty much what we see. We are caught within a small range right here recently. This is that move lower, we bounced off, and then we formed some area of consolidation. And now if you want to see price clear this range into this area, we could need a closure above 4.320, a retest, and you can see price push higher to gain back 4.431%. Vice versa, if we do drop back beneath and close beneath 4.27, a retest to continue lower into like 4.2 is definitely possible, right? And we could probably retest some of these areas down here, and if we do break beneath this, we could probably continue lower into some of these daily zones right here. Okay, yeah, this one right here. Alright, so that's pretty much it for bonds and also the US dollar. I want to see what happens next week during the retail sales release and also the big funds rate, as well as also the BOJ is releasing its own monetary policy statement. So I want to see what this entails for us. Okay. Alright. Now coming back into the S&P 500, I encountered some issues just now for the recording, so I am actually re-recording this as we speak. So essentially the same thing is happening right here for the stock market as well. For the S&P 500, we actually saw a pretty sharp sell-off, but the rebound was pretty quick. The market opened right here and then we dropped as low as 4%, but ended up closing just 2% down for the week, or around that figure. And essentially this is one of the quickest drops in history. If I go to the daily real quick, this is a really quick drop, right? We saw a drop of this is Monday, we saw this large drop, or from here, we saw this large drop of 6%, crazy, in just around like a week. So going back to the weekly, we are currently experiencing just large momentum of bearish pressure, and this is scaring a lot of people. Okay, this is scaring a lot of people, but we have to look at the figures, right? CPI did drop, as we just went over. It dropped from 3% to 2.8% year on year, and PPI also came in softer, which kind of indicates good for stocks, since it kind of eases pressure on consumer spending and also on corporate margins. And also something that I want to bring up is also crude oil is also seeing a drop. Okay, so if you open your crude oil chart right now, you can actually see that with lowered oil prices, it actually reduces cost for consumers, right? That's like gas prices are dropping and all those other things that you use for gas, for oil, and this kind of just boosts disposable income and also supports just overall industry-wide or even just market-wide equity valuations. Okay, of course, with all of these things, why is the market just dropping? Well, I'll be completely honest with you. I think this is just a reactionary effect towards the tariffs that Trump has implemented for just all of a sudden, bam, tariffs, right? Trump is well known for that right now. We are also seeing things like Trump's 200% tariff on EU alcohol, 50% tax on US whiskey, stuff like that from the from Europe. And this essentially, all of these things, some people, they don't even look into it. They just see it and they're like, oh my god, that's bad, and then this fuels the panic, which in turn kind of drives this large sell-off to the downside. But I would argue that from my own experience and from what I think, this is an overblown reaction to the fear, that we kind of saw in the past. For example, from 2008, this is in fact this might be a short-lived large reaction downwards, because in the end, in the long run, what moves the market is the data, right? GDP data, CPI data, inflation data, all those things are what drives the market in its long-term trend, right? Of course, data doesn't show you the entire picture, but it gives you a strong it gives you pretty much a strong idea on where the market should price itself towards. Okay, of course, tariffs, they could still trigger a recession, but bond yields that we went through just now, they look stable, and the econ data is improving bit by bit. We are still in stagflation, of course. I will need another month's worth of data to go over, but we are still in stagflation, but it's mostly mixed, right? It's mostly mixed. So with these two factors, bond yields are stable, data is mixed, it's not just one-sidedly bad. The worst case scenario that everyone thinks, which is just like a big market crash, it just may not materialize as of now. So with that in mind, let's just take a look at the charts. So we kind of know that at least for now we're kind of mixed in terms of stocks, right? This big move for 4 weeks. Let me see how much we dropped. We dropped like 10% in just like 21 days. So this could be scary for some people, especially for those that are short-term trading, which is fine. There's nothing wrong with that. But at the same time though, looking at the data, we think that at least this rebound off could send price into higher prices, maybe for retest to continue lower. Of course, it's possible, but also we could, if we do break above the weekly levels of 5.7k, we could see a retest to bounce higher into some of these areas right here for a potential rebound to see if we could go higher again. So with this in mind, let's take a look at the daily. Right here, what do we see? We're seeing signs that we're respecting this weekly level. We have formed something of like a small tight range, and we've broken above that range. So we could next week see an open low high close week with price continue lower into these area of weekly areas of resistance. Okay, so we could see that happen, but next week if we do dip beneath the 5.535 level, we could see price continue into 5.4k, and if it holds here, we could see a move higher into forming that weekly bullish candle. Of course, you are going to be buying into large selling pressure, so if it's not your cup of tea, I would recommend just sitting out of it. Okay, but if we break beneath this level, if this 5.4k level does not hold, we are likely to see price coming down the field this week and maybe ultimately retest 5.3k. Okay, that's pretty much what I'm seeing for stocks and also for indices. Right, so yeah, that is it for the S&P 500. Let's take a look at my good friend gold. So gold is on a mat one, right? Let's go into the weekly. We have just tapped 3K. CME gold actually tapped before gold CFDs did, or spot gold did, but we have reached the historical 3K mark. And if you recall correctly, I was mentioning that I wanted to see price reach this level before the end of quarter one, which we did. We reached it here in middle of March, so that's something nice to see. Your targets being hit, but where are we seeing gold travel from here, right? Now I think this push move higher, it's definitely driven by investors, seeing as gold is a safe haven, and we have, tariffs being uncertain. We're seeing the DXY kind of just fall down into nowhere. But we're also seeing things like central banks buying gold. Countries like gold, they are now resuming their previously halted gold purchases, which now adds more pressure on demand. And we're also seeing, increased gold imports from, say the Bank of England is also further supporting the rally. But these are just some of the factors affecting gold. I think, if you look at things on the bigger scale, there are multiple factors just adding into it. So I think that this is just one of them. Okay, I think this is one of them. So here we just close strong bullish. So definitely I wouldn't want to be the person that calls top. There's nothing wrong with that. If you are able to call it, great. But I personally am not able to start calling tops. So I would expect anything for gold to be kind of like just like a pullback into some of these weekly areas and continue higher, right? So 2.936, 2.909 and 2.858 are some of the key levels that I'm expecting gold to kind of push into to continue higher from here. Seeing just how the state of the economy is in, not just the economy, but just like just on a global scale of things. We could see gold transverse higher and not just stop at the 3K mark, although a retracement might be in play. Okay, so going down to the daily, these are the weekly levels marked out. But if gold doesn't want to do like a deep pullback, we could just come into the previous all-time highs at around 2.9K and just bounce off of this daily support. But ideally, I would want some form of a deeper pullback, something into just the front parts of 2.9K. I would definitely prefer gold to kind of do like a reversal into here, and then see like a bigger sustained push move higher. But don't be surprised if it just reacts off of these daily levels right here. Okay, so eyeing these weekly levels, but also keeping in mind that gold is something that could just tap off a level and just go. So always be prepared for that scenario as well. Okay, so momentum definitely, I'm thinking, could still continue, right? But be aware of just potential exhaustion, right? We've seen gold run on a mat one just recently, and since just last year as well, gold's been going crazy. So do be aware of potential potential exhaustion, seeing as how we've also just tapped the psychological level of 3K. So definitely do expect some pullbacks. I don't know how far the pullbacks will go, but just understand that I'm personally expecting those pullbacks, but then potential longs after. Alright, so that's it for gold. Next up we have Bitcoin. Alright, let me just go BTC USD, Bitcoin. Okay, so going here on the weekly as well, Bitcoin is something that's somewhat concerning, right? We're seeing investors kind of flock from crypto or just Bitcoin into safer assets like gold, for example. So Bitcoin definitely saw a large sell-off, and as of now, I don't think we are going to be seeing a break of the previous all-time highs of 109K. Long term, I might be bullish Bitcoin or just crypto in general, the larger cap cryptos, but yeah, I don't think as of now we are going to see just a large push higher into breaking all-time highs. I don't think that this environment for such a high-risk asset is capable of nurturing the price of Bitcoin to send it off into the moon. Now, I think we might just be ranging from here, or we might even do a deeper pullback into these weekly areas of like 71k. I think this is right here, like 71k, 69k right here. We could see price transfers into these areas right here. Okay. As of now, though, that's like a good area to buy. But right now, where we currently are is we have technically rejected off of a weekly level. Okay, and then we're finding some support right here. We have closed bullish for the week with a long bottom wick, but understand that this is coming off of a large bearish weekly candle. So this could be just coming up, filling some orders right here to then continue the bearish trend. So going down to the daily right here, let me just adjust some levels. With the daily, what we're seeing is that weekly candle kind of transverse higher here, and with this I want to see price hold above this daily level of 83k, and then we could see price go higher into 86k. Okay, but if we do break beneath it, I definitely do think we're coming down lower to retest this weekly, or maybe even this 80k level, to see if we can hold it. And if we don't hold it, then we're probably gonna dump lower into a bearish week, retesting this level at 78k. Okay, so it's a big if then statement, right? But I also do expect Bitcoin or crypto in general to just kind of like range in this larger overall range right here. That's something that I am prepared for, but on the off chance that it does dip lower into this weekly key area, buying opportunities are nice. Of course, you could always go lower, right? But this, as of now, is a pretty good area for you to long into, in my opinion, or at least DCA some of your trades into if you are someone that is looking to long crypto. Okay, so yeah, that's pretty much it from me for this week. Finally back on track for the weekly outlooks. I personally have missed them, and I'm glad I am able to come back to give you these outlooks once again. So yeah, definitely stay tuned for more outlooks, and I'll see you all in the next one. Peace.